Vacation.
Sure did.
Good to see you back. Great to have you.
Thank you.
And of course, I'm your boy, Johnny C, your air traffic control. Let's get your starting lineup on a Saturday.
Well-needed rainy week, at least up here. You know, maybe not so much down south.
Yeah, it's funny because I find myself nice to see you on a Saturday, as always.
Yeah, you too, man.
And always great to have our fearless leader. For 11 plus years now, I've been telling you, he runs a top producing Keller Williams team. Keller Williams Innovations, you find the Florida Home Pros team, and you find my guy, Jimmy D. It's Jim DePola.
Timothy, do I keep taking you off and kicking you on? So I'm hearing a neck. Oh, I know what I need to do. Hold on. Okay, I'm good now. Sorry about that. Okay, that was me. Sorry, everybody. Hey, happy South Florida.
Good morning.
Trying to be the tech guy and doing everything else is a little tough sometimes. Sorry about that, guy. It's a beautiful Saturday morning. We got so much to talk about today, guys.
Yeah,
a lot to talk about. We got a rumor floating around that Johnny, did you see that article I sent you?
Yes.
We got to talk about a little rumor later today. We got really big news for buyers and sellers. Whether you're buying or selling, there's news on the insurance front that you got to find out. So glad we have Ross here this week. Big changes on useful life of roof. We're going to go into useful life of roof again because this is a really big change in the insurance industry here in Florida, and you got to know what's going on in order to save some money. Also, there's a new down payment assistance program rolling out. So glad to have Mike here. We're going to talk about that too. I'm really excited about that. And we're also going to talk a little bit on, I'm sorry, hold on here. We're also going to be talking a little bit about, I'm sorry, hold on here in a second. We're going to be talking about what's happening in the economy today. We got some good news on mortgage rates. And there was a little article, Mike, that talked about how much savings you have compared on your monthly payment compared to last November. I thought that would be fun to talk about.
If you were getting a mortgage last
November compared to today, how much money you're saving.
Yeah.
So I thought that would be a good thing because, everybody's saying how bad the economy is when it comes to real estate. It isn't all doom and gloom out there. In fact, there's a lot of bright spots, and we're going to be talking about that today.
Well, you're in the trenches every day, so you definitely know.
Yeah.
So let me ask, technologically, are we sound right now?
You mean on the show or,
yes,
or globally?
Are we good technologically?
Oh, yeah. I think so.
Yeah.
I have
a little.
Because
I know last week we were a little off. Things weren't great. We stream, and I hesitated to mention anything out the gates this morning. Are we good? Are we good?
Yeah, we should be good.
So we go live stream every Saturday, y'all. Not only on the radio, Florida Talk Real Estate, but you can find Florida Talk Real Estate. That is .com, your one-stop real estate shop. We live stream on Facebook and on YouTube. I did hesitate to tell you out the gates because I wanted to make sure it was going well. Find us, Florida Talk Real Estate on Facebook. And of course, on YouTube, Florida Talk Real Estate, LLC, where you're live streaming for your 2 hours of infotainment. Hello, wherever there's that camera. Hi, camera. All right, good to know that we're good to go. Thank you, Jimmy D.
And thank you, Johnny, for setting the agenda. We really needed to do that. I just sent out a message to everybody saying, can everybody hear us on our streaming? So let us know. If you can't, let us know right away. We're going to start off with shout outs, and also the shout out's going to turn into a little segment about what happens when you sell your house and you have extra money than what you're needed for your down payment, and maybe how to spend that money in the most useful way. We're going to talk to Mike about that.
Vegas.
But there you go. There you go.
All on black. One time. I mean, it's statistically the best way to go.
You got almost a 50% chance. Almost. Yeah.
Okay. Okay. So let's go on to Matt, if you don't mind, Jimothy. Can we go to Matt?
Absolutely,
I know we have a caller coming in.
Excellent.
Matt was on hold. Now he's on the air with us.
Well, hey, Matt, welcome to Florida Talk Real Estate. How are you, my friend?
Good.
Welcome to the show.
Hey, Matt.
Hey, Jim.
Hey, how you doing today? Are you doing good?
Oh yeah, we're doing well.
Awesome,
Wanted to
awesome.
talk about my.
Go-
Yes, sir.
Go ahead. Talk about your.
I wanted to talk about our experience, my wife and I's, with Jim and Nancy, real estate. They sold our house in Florida. Did it within 2 weeks. We got a full price offer, and everything went smooth. And we're currently now up in Massachusetts with some family, and it was great. We had really good communication with Nancy and Jim. They were always on top of letting us know what was going on, what the market was doing, what all the comps were in the area and everything. And it was really nice to have someone that always took care of us.
Thank you so much, Matt. It was so great working with you and Lisa. They sold a house. They're actually bucking the trend of what everybody else is doing. So Matt and Lisa sold their house in Florida, and then they moved out to the Massachusetts, maybe Connecticut area, which we're going to talk about in a second. But they sold their house down here, got a decent amount of money for their house as far as equity to put on a down payment on their new home.
Awesome.
And when we put their house on the market, there were a couple things. When we talk a little bit later, Matt, today, you're going to be so happy to hear. Matt had a roof that would have fell probably into this situation, Ross, that we're going to talk about later. So when Matt came to us to sell his house, Bruce was a friend of Matt's. Matt didn't know anything about the show. So his friend, though, did, and Bruce used us to sell a house, and then he ended up buying a new home. I think, I'm not sure if you used you, Mike, for the mortgage or not, but Bruce has always been a big fan of the show.
Bruce H?
No, Bruce B.
Oh, maybe.
Yeah, I'm not sure. Yeah. And so they ended up having a very good experience with us. So when Matt and Lisa needed to sell, they said, you really got to call this radio show guy.
Well, thank you, Bruce.
Yeah, man, everybody needs a friend like Bruce.
I know.
Wow.
Bruce was awesome. Thank you so much for thinking of me, Bruce. And so Matt and Lisa really needed to sell. They needed to sell quickly because Matt had a new job up in Massachusetts, correct, Matt?
Yeah, and some family medical issues up this way too.
I wasn't even aware of that. I hope everything's okay. So what happened was they needed to sell it relatively quickly, but they didn't want to sell it low. I didn't want to sell it low either. It was a beautiful home.
Let me chime in there for a second,
Mm-hmm.
Jim. What happened is we had another company come out and do a appraisal for us, or they gave us their spiel. And then Bruce told me about Jim and Nancy, and I said, I'll check it out. I called Jim, and we spoke over the phone for about 45 minutes. Jim was on his first vacation in 5 years.
That's true.
While he was speaking to me. Then he took the time to do a full comp of my area while he was on vacation to show me, he wanted my business. And that's one of the things that sold me on Jim and Nancy was while on vacation, he took the time to get all the things I needed done in order to get on the track to sell my house.
Sounds like the Jimmy D
So
I've
that was
grown
really,
to know. Yeah.
And I had to wait
Like 10 days or
2
something.
weeks, Jim?
Yeah, about 2 weeks.
Yeah, 10 days to meet with Jim. But because he did all those comps and everything, I was more than happy to wait the 10 days, and it was well worth the wait.
Well, thank you so much. And if I'm not mistaken, did I do the comp video for you, Matt? Because that was back in January, so I don't remember if I did.
Yes, you did a full video for me.
Yeah, one of the things that's a little
What
bit.
impressed me is you didn't have someone on your team do it. You did it
I always do the comps.
while you were on vacation.
Yeah.
Got to get it done right.
Yeah, I always do the comps for the listing. It's really important that we really know how to set the price right. And what's different about the way I do comps, when you had the other company come out, Matt, Did when they presented their valuation of your house, did they do the typical thing where they gave you 3 pending, 3 active, 3 sold? They gave you paper comps,
Yes.
and they chose what houses that you got to see, correct?
That's correct.
Yeah, and what I do is I give, as Johnny knows, I give
Mhm.
you everything in the neighborhood, what's going on, and then I narrowed it down specifically to the house. Then I tell you why I think what you could sell it for, but I also show you why. I don't just uh, I don't know. If I were a seller, I wouldn't want my realtor to filter through everything and say, here are the 3 actives that I'm recommending, here are the 3 pending, here are the 3 sold. And this is what I think you could list it for without knowing what's happening in the neighborhood. Is the neighborhood trending upward? Is it staying stable? Is it in a declining neighborhood right now? You know, what's happening with the pendings? Like the most recent pendings, what are the prices that people are plunking down offers on? You got to figure all that out. And if you don't have that information, you can't make a good, in my opinion, you can't make a really solid decision as to exactly what to put the house on the market for. So when we were talking about it, just because the deal's done now, I was recommending that we put the house on the market for about roughly 2.5% lower than what Matt wanted. Matt wanted to push the limit a little higher than even me or his wife, Lisa, because we wanted to get as much action on the property as possible. But the number that Matt wanted definitely wasn't not doable. And it was in the pack of all the other properties that were available at that time. So we said, you know, I can't tell you you're not going to get that. So let's go ahead and see what happens. We put the house on the market. Matt, I just checked this last night. We had 20 scheduled. The house went under contract in 22 days. It was really 14 because it took us a week to negotiate the contract with the buyer.
Mhm.
But we had 20 showings in 22 days scheduled. I don't know if everybody showed up, Matt, but
They did.
it wasn't but it wasn't like a zoo, right? You weren't getting showing. It wasn't like I used to say, like, you felt like your house was a hotel when you listed because there were so many people streaming through the property. It really wasn't like that. You were getting about a showing a day on average.
Yeah, one to 2 a day.
Yeah, and we weren't getting a lot of offers right away. It wasn't like people came out and threw down the offer right away. And in fact, 2 or 3 of the other pool homes in the neighborhood sold before ours did.
Hmm.
And so there was a little
And they have
concern.
smaller square footage.
Yeah, and smaller square footage. There was a couple of reasons, and I was checking every week. I was checking to see what was happening in the neighborhood because we had to sell the house fast.
And in your opinion, those houses that were they selling at the right price?
Yeah, I was actually calling the agents that while they were going pending and having conversations with them. How many showings did you have? Or can you tell me what the offer that you took?
So the info you were getting on those closings were making you feel good about your position.
Yeah,
Yeah.
I did. And at one point, there actually was a talk about a price reduction. And my attitude was when we looked at everything is I don't know if I would cut the price right now because now that the other couple of properties have gone, you're the best one on the market. So now cutting it now, I didn't see the value in that. And
Right.
would you know it, like 2 days later, Matt got the exact price, the full list price that he was looking for, which made me so happy.
Yeah.
Now, so Matt, you did a great job. Maybe you should be a realtor and you part-time or something. I know you have that in your family. So,
Yeah, a little too busy for that.
yeah, I know he is. So what ended up happening was there were some issues that I felt that were there were so many positive issues, positive factors of the house. Huge lot, great neighborhood with 8 schools. In fact, one of the A-rated schools is right across the street from his house, right? All positive stuff. The house was recently renovated on the inside. Almost every square inch of the house had been touched.
Nice.
Has a pool, fenced yard. There were just so many positives. Now, some of the negatives, he was on the corner of a corner lot on a neighborhood that had the main road go by. Royal Palm Beach Boulevard was on his one of the perimeters of his yard.
Sure.
That was a little bit of a downside. And the other thing is that, well, really, no, the other thing was the roof, right? And the roof, I think how old was the roof? was like 19 years old, right?
Yeah, I was about 19. Yeah.
It was 19 years old, and we were worried about useful life of the roof, which we're going to talk about with Ross much later.
Shingle?
It was a shingle roof. We were a little concerned about the useful life. I explained what could happen in that situation before we even started the listing.
Right.
We talked about what would happen if we had a problem with the useful life of the roof.
And that's part of your comp. I mean, right? The age of the roof is part of your comp.
Well, if you do it right.
Yeah.
So what ended up happening was when we went through the sale, their useful life came up, and we were able to get 3 years useful life on the property, 3 years useful life or more. The buyer came back and wanted some kind of credit. Very gently, they asked. We very politely said no. Very politely, because the buyers and the sellers got along great in this situation. And everything was rocking along. And then we found out that the buyer had a problem with their financing, and he was self-employed. And I knew that could turn into an issue, and I went over it around with him. The agent felt that the agent was the buyer on top of it. So the agent was representing themselves while they were buying the property. So I was coaching the agent along the whole way as to how to try to deal with the self-employed issue. I think he had to go through 3 lenders before he ended up getting the deal. And I think he went to a hard money lender. Is that true, Matt? Do you remember? I think he went to a hard money lender. And just for the purposes of the show right now, one day we'll get into hard money, but hard money is basically a non-conforming loan where you're going to usually a private individual and saying, hey, Mike, can you loan me the money on this house? And Mike says, sure, at 14% interest only. And sometimes that's what you pay.
Right.
So, but everything worked out well. Our closing took a little bit longer because of the financing. So the sad part, the stressful part about this, Matt and Lisa thought for sure that they would have their money as they were driving up north to Massachusetts, and they already had an Airbnb because they were looking for a new home up there. So they needed the money from the sale of the home to help pay for the huge deposit for the Airbnb because they were going to stay there for a little while. And now they didn't have their money because while they signed before they left to Massachusetts, the buyer wasn't ready to close yet. So what we did is we were able to negotiate with the buyer where they released all the escrow money to Matt and Lisa, even though we didn't close. And if they didn't close, if the buyer didn't close, Matt and Lisa were going to keep that money even if it didn't close. So they released the escrow funds, which gave Matt and Lisa the money they needed to get the Airbnb.
Wow, that's amazing.
Yeah, so that whole part worked out. And I know Matt wants to ask a question to Mike, but I want to go over the 3 things that really made this deal work. Okay. Number 1, they priced it right. They didn't go too high. There was a house in the neighborhood. Remember the 589.9 house? That ended up, Matt, that ended up closing $4,000 less than you. Okay. And we got full asking price on ours. And they dropped their price almost $30,000. They dropped their price. I think $29,000 drop on their list price to sold price.
So you're really highlighting how setting that price is so very important because they had to reduce and got less than you, and you got 100% of your ask. So I mean, that's a dramatic difference.
Yes, and the realtor over there was not very cooperative with me when I was asking information from her, and I could just see that, she was so cautious about everything and so close to the vest that there was no sharing. And I was like, you're probably not going to get the same results that everybody else. And all the other realtors that were selling houses just like Matt's, including myself, we all got very close to list price, except for her. Right. And she was the one that was she was definitely overpriced. Now, so Matt and Lisa priced it right. The other thing that made Matt and Lisa so much fun to work with, really, I wish every customer was like Matt and Lisa, was that they never panicked when an issue popped up. When we were worried about the useful life, they didn't panic, right? They just let me do my thing, right? Matt's favorite line to me, Jim, I'm trusting you. Whatever you say, that's what I'm doing. That's what I pay you for, right? So they never panicked when things popped up. And then the other thing that we really need to make sure of is make sure your buyer can close. I was very focused on making sure that the buyer could perform at the end. And we even actually at one point had him talk to Mike because we thought Mike was going to be the safety net, and they ended up doing a hard money loan. So Mike doesn't do that stuff. So they decided to stay with who they were. So it was just a really good overall around experience. Now Matt and Lisa are having fun. They're up there hunting for homes. So Matt, just tell me real quickly the difference. We had a great conversation yesterday, the difference of selling a home in Florida and being a buyer up in the Massachusetts, Connecticut area. And you mentioned a bunch of things that were very surprising to me. Tell me what it's like up there being a buyer.
Okay, it's very different up here. The realtors up here don't want to do private showings. They only do open houses. So you're going to this open house, there's 20 to 30 other couples in the house at the same time as you, and more are pulling up. Surprised the heck out of me because I thought the real estate market wasn't going, this well up here, but I guess it does. And then every home we looked at and we're thinking about sold the next day.
Jeez.
Yeah, they're going really
And
hot up in his
according to
area.
the realtor that I talked to, multiple offers.
Yeah, so it's very hot up there from what they're telling me, very competitive. Like I said, they have realtors in their family, so they know what they're doing up there. They're not with somebody they don't know and trust, right? Because they have to, it's hard when you move into an area you haven't been up there in a while.
Sure.
You have to understand the commute times, like going back and forth to work and your lifestyle, understand where your shopping points are and stuff, and kind of make sure that you're comfortable in the area. So it's a little different up there right now, which I find to be very interesting. Now, what you get for the price point, believe it or not, the house that you're looking at today, your favorite one that you're going to be going out to, Matt, what a nice home. Yep. And it's under $400,000 this home. Down here, I don't think that house would be $400,000.
Comparatively, like market wise, though, what was that home like a year ago? I mean, is it doing similar to what we're doing their market?
I don't know. I don't know the area that well. He sent me, a copy of the listing to take a look at it.
It's called Florida Talk Real Estate.
Good point. Yeah, that is a .com. Wow. That is a .com. By
It
the way. Your one-stop real
downtown,
estate shop.
Yeah.
FloridaTalkRealEstate.com.
So Matt, it was really great working with you, and I know that you got to get going because how many houses are you going to look at today?
6.
He's looking at 6
All
houses
open
today.
houses.
So he's going to be
Can't get
busy.
a private showing to save my life.
And they're all open houses.
It seems
That
like
would give me anxiety, like walking in
open
with all those
houses.
people looking. You're like, man, I got to buy this one now.
That
He
right
said
now,
that,
man.
Matt, how many people are you seeing coming to these open houses at one time?
The last one we went to, there was 30 people.
Can you imagine?
it sounds
And
like
that was just on the list.
Wow.
it's a
There was just
listing
people in
agent's
every
dream.
room. You
Yeah.
couldn't look at things and do things that you wanted to do, measure and stuff. There's people everywhere.
Yeah. Yeah. Well, I wish you a lot of luck today. I hope that one house is exactly what you're looking for and it's your offer that they take. And you got to let me know what's happening as you go through the process. Okay.
Oh yeah.
Thank you for you and Lisa trusting, the Florida Home Pros and me and Nancy to handle your sale. And I wish you so many happy years up in Massachusetts area.
Oh, thank you.
Okay. Have a
Hey,
great day,
thanks,
Matt.
Matt.
Oh,
And
no. I don't want to hang up. I forgot. Matt has a whole thing he wants to ask Mike.
Geez.
I totally forgot about this. So we're going to go over to Mike now. So Matt, you had a great question for me yesterday. So here's your chance to talk to Mike,
Yep.
the mortgage guy, and find out what the answers are.
All right, Mike, this is my question. I'm thinking about putting $50,000 down on a home I'm looking to buy, but is it better to put the money down on the home or to keep it in my account and then just pay on the principal? So that I have that money.
So, okay. And this 50,000, this isn't the entirety of your down payment. This is like an extra 50K and you're like, what do I do with it? Do I put it into the house or do I keep it in the bank? Is that?
Well, I have a VA loan, so I don't even need a down payment, but I just was trying to bring the cost of the home down.
Okay. Well, that's
Money
awesome.
market
Thank
rates
you.
are like 5% now.
Yeah. Thank you for your service.
Yes.
And yeah, Ross actually, he just said money markets are like 5%. So the question is, can you do better somewhere else with that 50,000 investing versus and I think the answer to that is not so clear, right? So your VA interest rate, let's call it 6%, right? If you can't do better than that, then you should put it on the home. But I think my take on it is a little bit different in that how important is that $50,000 to you as far as nest egg, right? Emergency fund type of thing. Because once it's in the house, it's very difficult to get out, right? It's like putting it into a savings account that's difficult to access. Not that you can't, obviously one way to access it is to sell the home, maybe some sort of home equity product, but it depends on market value of the home. It depends on interest rates. And so I think just philosophically, and I can't tell how old you are, Matt, but the later in life you get, I think it makes less sense to have that money in a difficult to access place versus having it in the bank. So even if it were just in the bank, sitting there at 0% interest, it's accessible.
Right.
And you could earmark it.
Right.
So there's going to be, obviously there's a difference in the mortgage payment, right? It's probably, I use the quick math is $30 on the payment per 5,000. So $60 per 10,000. So you've got a $300 a month difference, right? Yep. Johnny's doing the math in his head too. So putting the $50,000 down versus not is going to mean $300 a month on your payment. And if you just set that $50,000 aside exclusively to make up that difference in the payment, what's 50,000 divided by 300? Who can do that?
I think that's like 150
yeah,
months.
it's a lot of years. I mean, it's 10 years plus. Now, you also have that 50,000 where you could burn through it, right? Like I mentioned, going to Vegas or something, right, earlier. So if there's a chance that you're going to blow through it, then it maybe you put it in the house because that's a guarantee way not to blow through that money. But so I would say, what is it, Jim? 166.
There we go. Off by a little bit.
So divide that by 12 real quick. And it's, that's over 12 years of that $300 difference.
Yeah,
if you set it aside
years.
Exclusively for that.
Yeah.
So I would say if it doesn't impact your ability to qualify and you're okay with the higher payment, like you're comfortable budget wise, then to me, it's like, yeah, I wouldn't put it into the house unnecessarily, right? It's going to move the payment $300. But
all right,
some people are more conservative on that than I am, right? So it's like, no, here's my income. Here's what my payments are going to be. I know I can cover it. That 300 is going to make me stretch. It's going to make me dip into this savings. So I don't want to deal with it.
Well, and you can at least control it. Like you said, if you don't put it in the house, God forbid the housing market goes kaplooey, like your home value drops out. Right. So you got to kind of have that doomsday almost. If you're debating what to do with it, you got to look at both ends of the spectrum, right?
This is definitely that's a big one. Like, so if we have a major event where the housing prices go down, that 50,000 is gone. Poof, until your home value comes back. Right. So that's why I say, especially later in life, like it makes less sense to have that money tied up based on the market value of your home, right? It's entirely based on the market value of your home, which it is today what it is. But a year from now could be different, 5 years, 10 years. I mean, it's going to change. The question is it going to go way down? Then you're stuck waiting around and now you have no access to that money. So
Bruce, I'll tell you, Mike is really consistent in his answers because I'm in the process of doing like multi-generational combination, right? So we were planning, kind of getting ahead a little bit about what to do with proceeds of sales of two homes. In my mind, it was just put it all into the new home. And Mike instantly was like, whoa. Yeah. You don't need to do all that, right? You can, because there's a more conservative approach to, again, just being prepared for market shifts and what your money can be doing. It might be able to earn for you, as Ross noted out the gates, or just the accessibility of the money, right?
Yeah.
To be able to decide what to do with it. Can you get at it when it's in your home? Well, you can, but there's cost to getting at it. And if the market changes, now maybe you can't get at it.
Yes.
So there's a ton of variables to really look at. And it's got to be kind of what you want that money to be doing for you. As Mike noted, even if it just sits there and you just use it to pay the extra $300 a month towards your note, that might be the best option.
Yeah. And like it was easy when rates were down in like 3%, Jim, I would say all day. I say, number one, this is generally how I think about it. Number two, talk to your financial planner because they may be able to do something where you're earning 6-7% and you've borrowed at 3%. So in that case, all day long, you keep it accessible with the risk of the market, the investment market.
Right.
But yeah, so yeah, I
Long answer.
would probably lean towards take advantage of a VA loan. It's 0% down. It's no mortgage insurance. And if you can tolerate the higher payment from a budget perspective, then yeah, I would probably keep the money accessible.
What about buying down on the interest rate, like a permanent buy down on the interest rate?
Oh, I'm glad you brought that up, Jim. So you can definitely take some money, and let's say you have to understand the concept of the par interest rate. The par rate means it doesn't cost you points, right? That doesn't mean there's not going to need no lending fees, but this is just points. As 1% of your loan amount as a fee, and you can use that. You can pay those points to get a lower interest rate. And so when Jim says a permanent buy down, he just means you pay X amount of points and buy your rate down to something lower than par. So if the par rate is 6%, well, what's it take to buy down to 5%? And it's not going to be 1 point, doesn't buy it down 1%. It's probably a quarter of a percent or 0.3%. So you go down to like 5.75, paying 1% of the loan amount.
Right.
That's something you should look at too. Although, Matt, there's break-even math to be done there, which is if you pay, it'll be something like, hey, Matt, give me $3,000 right now, and I'm going to pay you back $50 a month, right? For the life of the loan. So how long does it take you to recoup your $3,000? Right. It's going to take 60 months, right?
Yeah, 5 years. Right.
So a 5-year break-even, I'm not so hot about. But if it was something like a 2-year break-even, or a 3-year, I kind of like that, right? Because if you happen to refinance or sell the home before the break-even period, then you should not have bought down the rate, right? You're in the red on that decision. So you got to get to the break-even point where you're in the black. And then, of course, the longer you have the loan over the life of the loan, the more money you've made, right? I'm paying you $50 a month over the next 30 years,
right?
Potentially. So I would look at I would look at that carefully, and I would calculate a break even. And the question is like, is there going to be an opportunity to refinance before that break even period? It's very hard to answer that question right now. Like I would say sometime in the next 5-year window, 5 to 10 years for sure, there'll be an opportunity to refinance
maybe
at lower interest rates. Johnny says maybe because it's true. It is a maybe. You don't know.
The average rate that people have held on their home
6 to 8%, something like that.
Almost 8% since 1974.
Yeah.
7.78% I read. That's the average since 1974. I think that's a good number to kind of have in your head. Yeah. That 3% number we had is ridiculous, and all it's done is poison people's minds.
When they started the 30-year mortgage in the 1950s, it was President Eisenhower created that when the GI Bill, when they all came back from World War II. And when they set the 30-year mortgage, because there wasn't one that existed up to that point, I think the most you can get was a 10-year mortgage. The 30-year mortgage was over 4% in 1952, right?
Yeah, but they were borrowing like 30 grand to buy a house, right?
Yeah,
25,000.
Well, yeah, but people were making very little money comparatively too. But the thing is just to show you, like in the 1950s, interest rates were in the 4s. Okay, so we're not doing so bad, right? I mean,
we're doing great. Actually.
Yeah,
it's
just that people aren't used to it because we've, you get that sugar rush for a long time, and then you don't have your sugar anymore, and you're jonesing for the sugar.
Spoiled.
Right?
Yeah, and it was artificial sugar too. It wasn't even the good stuff. It was
stuff,
artificial cancer-causing sugar.
Well, Matt, overall, what Mike said, how did that compare to what I told you last night? What I predicted, what Mike was going to say?
I think last night you said that it all depends on the market, on what you do with your extra money. But what Mike said made a lot of sense to me as far as keeping it accessible, because I can afford the payment. Mm-hmm. I just didn't know if that would be better in the long term to pay down the principal, because I once heard if you pay an extra payment on the principal every year, you can turn a 30-year loan into a 15-year loan.
I think it's like it's really a 20-year loan if you make an extra payment a year, right?
Somewhere between 22 and 23. So if you make one extra payment, so the equivalent of 13 annual payments, then you shorten the term of the loan, right? Because that extra payment goes as a principal reduction. And anytime you pay anything above and beyond the regular payment, you're shortening the term of the loan. It starts at 360 months. you're shortening to something less than 360 months. But now, Matt, I will tell you, if the analysis, forget about what the answer before. If your question is, how do I pay off this loan and pay the least amount of interest over the life of the loan? Then the answer to that is yes, you borrow less, and yes, you pay it off as quickly as you can. If you say, should I put $50,000 now, or should I take that $50,000 and do principal reductions as quickly as possible? Then I would say no, put the $50,000 down, because you're going to be paying interest on $50,000 of money that you wouldn't have borrowed otherwise.
That makes sense.
And doing a principal reduction, you would have to. The only way to do an equivalent principal reduction and pay less interest is to put the $50,000 down right away, right? So you might as well just do it when you borrow the money. So if that's the question, paying the least amount of interest over the life of the loan, then I would put the $50,000 down. But the spirit of my answer is not about how do I pay the least amount of interest. The spirit of mine is, how can I be the most secure with the money? You've got this nest egg, and I don't know how that compares to the rest of your nest egg. If that's not relevant, then don't worry about it.
Right. Potentially, what's the best usage of the 50 grand versus
Yeah.
It's just
how do I
gravy
pay?
from the sale
Right.
that
That's
like, hey,
what
didn't have
I was
before.
looking for.
It
And
is.
just-
Yeah. So there's no way to compete from an interest penalty than just putting it down
Putting
now,
it
just
down.
borrowing less money from
Yeah.
the start. So yeah, I'd love to talk to you more if you got more questions about it, Matt. We can talk about it off air.
You know that we're always going to be here for you, Matt, the whole team. We're the one-stop real estate shop.
Absolutely. Matt, congratulations. Keep us updated how things are going up there. All right.
Will do. I appreciate you guys. You guys gave me a lot of good information. And thanks again.
Thank you so much, Matt. I appreciate it. Stay safe up there. Happy house hunting.
Exactly.
I love saying that.
All right,
Happy
thank
house
you.
hunting. Okay, bye-bye.
So that is a toll-free number that Matt just dialed up, 877-927-6969. We are live Saturdays for 2 hours of infotainment. You want to talk to a pros pro? You got a question? Go ahead, dial it up. Jimothy will get you going. Always remember, Florida Talk Real Estate is .com. That is a one-stop real estate shop. Access to this entire team. Pros. If you're listening to the conversation, you might be saying, wow, they're pretty good at what they do. You're probably listening for the first time if you're being kind of hit with that today. Thank you for tuning in. This is a team of pros at FloridaTalkRealEstate.com. They are really good at what they do, and they work cohesively together to get things like, Matt's sale done. Reach out, FloridaTalkRealEstate.com. You see the hotline there, 888-973-7828. You can call it anytime, 24 hours a day, 7 days a week. Remember, on Facebook and YouTube as well, Florida Talk Real Estate. We're going to do a quick little break, 4-minute reset. We get back to it. What are we talking about when we come back?
Oh, this is really important. Anybody that has a roof on their
Anyone
house,
with a roof.
anybody that has a roof on their house, you're going to want to listen to the next segment
All
for
right.
real.
I'm coming back in 4 minutes.
I'm out.
Then. Yeah. Jimmy likes looking at the stars.
Yeah.
Yeah, exactly. Remember, FloridaTalkRealEstate.com. Know it, use it, love it, and share it. 4 minutes from now, we're back at it. Florida Talk Real Estate. It's right here, Real Radio.
We'll be your friend. Follow us at Real Radio 92.1 on Facebook, Instagram, and Twitter.
From the Gordon and Partners Weather Center. Have you or a loved one been injured through no fault of your own? Call 561-333-3333 or go to fortheinjured.com.
I'm meteorologist Jennifer Collins with CBS 12 News. Mostly sunny and warm this afternoon with highs in the mid to upper 80s and the chance for an inland thundershower. A few clouds tonight, little humid too, with temperatures in the 70s Sunday morning. A warm and breezy end to the weekend with scattered afternoon showers and storms on Sunday.
This report is sponsored by NTT IndyCar Series. Experience the Acura Grand Prix of Long Beach this Sunday, April 16th at 3 o'clock Eastern live on NBC and Peacock. Watch the fastest cars and the boldest drivers fight to the finish line. The Acura Grand Prix of Long Beach this Sunday at 3 o'clock Eastern live on NBC and Peacock.
Hey, it's your boy Johnny C here, host of Florida Talk Real Estate. They're tops when it comes to helping people buy and sell houses. But Florida Talk Real Estate is so much more than that. For 5 years, I've watched these guys help thousands of our listeners with any real estate need. They couldn't do it without their sponsors, who are experts in their fields. Check it out. Jim DePola, powered by Keller Williams Realty. Their team specializes in helping people sell their house for top dollar, and buyers get great deals on the purchase of their home. That's what they did for me and my family, and I couldn't be happier that I hired them for my real estate transaction. Mike Rauch from the mortgage firm is one of our favorite guests on the show, and he is the mortgage guy. Whether you're looking for a refi or a mortgage to purchase a new home, Mike Rauch will get you the answers you need. The mortgage firm is licensed to do loans in Florida, Alabama, Tennessee, and Georgia, and they have local offices that cover all of South Florida. So if you're thinking about a refi or a new mortgage, go to the mortgage guy, Mike Rauch, and find out what he can do for you. The Mortgage Firm, Inc., NMLS 189233, Florida license MLD 78, equal housing lender. The law office of Paul A. Krasker has been specializing in real estate law for nearly 25 years and has the professional team you need. Upside down with your house, Paul's team can help you conduct short sales, loan modifications, even if you're behind on payments. They also help you with foreclosure defense and bankruptcy. They can even help you get a student loan modification and repair your credit to get the score you need. Paul's full-service team has helped thousands of our listeners, and they can help you too. Trident Title LLC is the largest privately owned title company in Florida. When you need a title company to complete a refi, home purchase, or sale, Trident Title has got you covered. Not only do they offer competitive pricing, Trident Title has attorneys on staff to make sure if you have bumps in the road declaring title that you can get the job done. Beware, not all title companies in Florida have attorneys on staff. Trident Title does and complies with all the new federal regulations released last year. Ross Komarinetz, owner of Brightway Insurance, has been helping our listeners get great rates on homeowners insurance plans. Haven't checked your homeowners insurance policy in a while? This is a great way to help reduce your monthly mortgage payment. Ross can also help with renters and auto insurance. Ross is only a phone call away and can usually get the answers you need same day.
Call Ross today at 561-425-6228 or drop by his office at 873 Donald Ross Road in Juno Beach.
So now you know why I'm happy to be part of the Florida Talk Real Estate Show, the longest running real estate show in Florida. And all these sponsors are just a phone call or a click away. Just call 888-973-7828. That's 888-973-7828. Or go to floridatalkrealestate.com. That's floridatalkrealestate.com. And don't forget to use the most accurate search engine to find your new home or ask for a free home valuation because floridatalkrealestate.com has you covered. That's floridatalkrealestate.com.
This is Real Radio 92.1 and 101.7. Real talk for the Palm Beaches and the Treasure Coast. This is Florida Talk Real Estate with Jim DePola and Johnny C. Got a question for the show? Call us live at 1-877-927-6969.
I'll say it again, 877-927-6969. You dial that up. Jimothy, our producer, he'll line you up there. You make the call, we'll take the call. Questions, comments, concerns in the world of real estate? Go ahead and hit us up. Thanks for being with us, 92.1, 101.7. Maybe you're streaming live with us on a Saturday. I understand it's working well today. Facebook, Florida Talk Real Estate. YouTube, Florida Talk Real Estate LLC. Streaming live on both. And, of course, if you have your free download, your iHeartRadio app. We are worldwide. I'm your boy, Johnny C., your air traffic control. Jimothy's back with us. What's up, brother?
Hello, and good morning, gentlemen.
Good morning. Ross Komarinetz with Brightway Insurance. Juno Beach is with us on a Saturday. Great to have you, as always.
It's good to be here.
Thanks for your sister in the break. Nobody else knows what we're talking about, but you are a superhero to all of us because there was an annoying noise.
Oh my God. I thought you said thanks to your sister.
Yeah, my sister.
Like, what did I miss? What did I miss?
That's what I thought he said.
Thanks for your sister during the
Thanks.
break.
Thanks, Ross, for sharing your sister.
During the break. Thanks
My
for
imaginary sister. You're welcome.
Thanks for your assist during the break.
Gotcha.
Yes.
Gotcha.
Were you able to take the whole thing right out?
I
The
just
paper
pressed
up
it
there?
down. It was tape.
It was a form of duct tape. Did you hear it while we were the last segment?
I could hear it too. Yeah.
Yeah, we got it figured out though.
Nice. Well done. Thank you, Ross.
Don't forget to charge the tech fee to iHeartRadio.
Yeah. Send a bill to Bob Pittman.
And that was dangerous work too. It was high altitude.
It was, yeah. That's probably like at least $250 for that hour.
Boom.
At least. Mike Rauch, the mortgage guy from the mortgage firm. Always great to have you with us.
Yes. Hi.
Thanks for not assisting in anything during the break.
Yeah.
I came up with the
He
idea.
was the eyes. He was the
I
eyes.
came up with the idea. Yeah. I'm
He
like
was the
the
eyes.
foreman.
He was a navigator. You know?
Well, hey.
One guy working, 4 guys standing around watching.
That's what it looked like too, man.
How many How many radio guys does it take to tape a piece of tape?
Oh, well,
or to retape the tape?
yeah.
Some other crew put it up in the first place.
It was probably Greek, I'm guessing. Yeah, I can see Greek on the table, much like Ross was.
I don't think he's tall enough.
True. Yeah, good point. That's Jimmy D, y'all. Jim DePola, he runs the Keller Williams team that I've been talking about for over 11 plus years. Top producing Keller Williams team. It's the Florida Home Pros team. That's where you find Jimmy D. Jim DePola. Jimmy D, how you be?
I'm doing great. We're going to get right into it because we're running a little late on the last segment. We got to get into this insurance stuff, Ross, because it's really big stuff happening. So do you mind if I just kind of set the foundation? Then you're going to correct me with any factual inaccuracies that factual inaccuracies. Is that a
yeah, it is
I
now.
think that's it. Yeah, I'm making it up. It's
Wait, factual inaccuracies.
Yeah, factual inaccuracies.
Yeah,
I don't think that's right.
What
So,
type of foundation are you going
I
to be
guess
using?
it could just be inaccuracies. So
Crawl
if I have any
space, elevated.
inaccuracies, you're going to correct it. Okay.
Did you hear that? I said,
So-
what type of foundation are you going to be using here? to
A
set it?
monolithic slab.
Okay, that's the best. Wow, that's the best.
Okay. So what we need to go over, just set the foundation. So right now, if you're trying to get insurance, everybody's making fun of me. I'm trying to keep on track, guys, here. Right now, if you have a house, or if you're buying a house or selling a house like Matt and Lisa were, one of the things you have to worry about is that if your house is 20 years or older, you have to do a 4-point inspection, and part of the 4-point is what's called a useful life roof certification. And useful life for citizens, it's always been, well, not always, but most recently it's been you have to have at least 3 years useful life in order to get an insurance policy. If you don't have at least 3 years useful life, anything under the number 3, then even Citizens is going to make you replace the roof in order to get an insurance policy. Now, the other thing that people don't understand, and Ross and I have talked about this a lot because you get a million phone calls on it, is that let's say that you have 3 years useful life on your roof, and then you put a new roof on, you're going to get the same insurance quote as if you didn't replace the roof, because having 3 years useful life or a brand new roof means that your roof, according to Citizens, is okay, right?
Unless
Now-
you take the opportunity to go in and maybe address the roof to wall attachment at the time you're putting on the roof, right? So like the strapping, if you don't have the hurricane strap.
No,
You know, that's
no,
not
you
even
know-
a big savings right now.
Really, even
Yeah.
that isn't a
Yeah,
savings.
it doesn't make up the cost of it in the first year. I can tell you that.
The strapping?
It probably takes you about 2 years right now to make.
Wow, remember when we had that one guy? He had like he went up to like $6,200 a month for insurance. So we had your company come out, Third Nail, not your company, Ross, but a company that you use all the time. Really great company called Third Nail, and I think he paid about $1,500 to restrap everything, and his insurance payment went from $6,200 down to like $2,800
Yeah, it
or
was like
something like
$2,500
that.
or something. Yeah, it was crazy.
Yeah, and so that 1 year he saved, he made the money back. Now at even 2 years, you're not even sure you're going to get your money back.
Probably about 2 years right now.
What if we go in and put a fourth nail?
Who's fourth now? I don't know, man. We'll
Yeah.
throw it in there. We'll see.
That might make all the difference.
So now though, we've gone through a lot of insurance changes over the last 2 years. We went through some changes in 2021. 2021 was more about the lawsuits, right? Ross, if I'm not mistaken, I think that's where they started saying that if you're going to sue the company, if you're going to sue your insurance agency, you have to give them notice. Also, now you only have 2 years to file a claim for like an event like a hurricane or hail or something like that. You
Instead
only
of
have
3.
2 years instead of 3. I don't even know why you need
Have
2.
those
but
laws
whatever.
gone into effect?
Yeah.
Okay.
Yeah.
All right.
And also about the way that you
Assignment of benefits.
Assignment of benefits, meaning that you can't just tell the contractor you deal with it. You deal with the insurance company. You can't do that anymore. Also, if you're going to sue the insurance company, you have to pay your own attorney costs.
That's a big one.
Which is a really big one. And now what they're
So it
doing.
used to be the attorney would take that case on and they only got paid based on a percentage of what they
No, they
recouped.
would no if they won or got a settlement, then the insurance company paid their fees.
all their fees,
Yeah.
and even if they win
Wow.
a dollar,
So you charge $500 an hour, you get $500 an hour for however long you work.
So
on that case.
it wasn't like a personal injury type
Correct.
situation.
Right.
It was they paid the fees just flat no matter what.
Right. That's why I
Wow.
always throw out that statistic from like 2019 or 2020 where there was like $15 billion paid in claims that resulted in a lawsuit, and 71% paid the plaintiff's attorney's fees.
Just the fees.
Only 8% went to pay the property damage.
and you only have to win $1
Yeah.
in order for that to go into effect. As
There it
long as you
is.
win $1 from the insurance company, they got to pay all your attorney fees. That's the way it used to
Got
be.
you. And now you, the person hiring the attorney, is responsible to pay all the fees the whole way through. That's a very different beast.
Very big deal.
Was
but
there-
unless you win, then
Of course.
Yeah.
Right.
Was there any math done by the insurance companies to say, hey, listen, even I don't care if it's fraudulent, we're just going to pay the claim versus litigating? Did anyone do that math? Like how many
well,
claims
that's what
were
they would
there?
do. So they would, instead of litigating, they'd actually just settle. Be like, all right, I don't even want to go through. Just here, take the 15 grand because shoot, it may cost us 100
Right.
with the attorney's fees.
Yeah.
So there are a lot of settlements.
Now they try to give some benefits to the homeowners while they're doing all this. Okay, so some of the benefits that the legislature gave the homeowners, or rights, if you will, is that insurance companies are not allowed to deny you for the sole purposes of the age of the roof if it's 15 years or newer.
So that's on renewals.
Only on renewals.
So the company can't say, hey, your roof is now 16 years old, so we're going to cancel you. They have to give you the opportunity to provide evidence that there's at least 5 years of useful life left.
Right, and that was 5 years useful life for the renewals. Now,
Correct.
Citizens, let's say you got 4 years useful life, right? That company is allowed to drop you, but Citizens would pick you up on that report because you would have 3 years useful life or more. So that person would slide from their whatever insurance company they had, and they could go to Citizens if they wanted to. But now, starting May 1st, this is a very big news, guys. Citizens is now going to a 5-year useful life from a 3-year useful life.
For new business, and then in September, they're going for renewals.
Even renewals.
Uh-huh.
So if your roof doesn't have 5 years useful life on it, and your house is 20 years or older, right, Ross? Or does that have to be
'cause
older than 20 years?
Older than 20 years is going to require a 4-point inspection with Citizens. And on that 4-point inspection, the remaining useful life will be indicated. So it's got to be 5 now.
And if it isn't 5, what will happen at that point, Ross?
We're not going to submit it.
You can't,
No.
right? And then they
We're
would
gonna
have to.
we're going to
replace
tell
the
you,
roof.
yeah.
Your house is uninsurable. You have to replace the roof.
Wow.
This is a very, very big deal. I brought it out to my broker, Dan.
Can I stop real quick?
Sure.
All right. So at that point, you end up with forced place, don't you? What happens?
You can't close. You can't buy a house.
So we're only talking. Okay.
I mean, right now we're talking about May 1st because that's going to affect all the people who are under contract right now.
Okay. So, but I was missing the part about new purchases. I thought we were strictly dealing in just new policies.
No, you're right.
Yeah. So you are right. So if you're getting you can't get a new policy with Citizens. And then, so you're talking about if their old policy canceled because they didn't have 5 years.
Uh-huh.
Now they just don't have 5 years. So now they can't get insurance.
And now they can't get insurance. You end up in forced place. How do they force you into something where nobody's accepting you?
Well, the bank is just going to say, hey, if you can't provide us proof of insurance, we're going to get our own, policy on that house.
But
that
what
just
Johnny,
benefits
but what
us.
Johnny's asking, how are they going to do that
if nobody's accepting you?
Well,
How
that's
does that
what
happen?
forced place is.
Bro,
But forced place, they have like a contract with
where they just ramp it up so high.
well,
that
it
they're
just
like,
gets they've got kind of like a blanket, and they just add that to it, whatever that cost
okay.
is. They've got a contract with some insurance company that's direct that when they're insuring, when the bank gets forced place insurance, the bank is just insuring that asset for themselves. It has
They're not
nothing
doing
to do with the
contents or
homeowner.
anything, right?
Nothing. The liability gone.
Right.
That you have no liability at your house when you have forced.
But
place.
it's also traditionally more expensive.
Yeah, but I got a guy who's got forced place insurance right now. He's paying 11 grand. The best that we can do is 40.
Wow.
40,000
Yeah.
a year?
Yeah.
Or is that a lifetime policy?
wow.
Holy cow. So
Holy cow
I
is
guess to
right.
Johnny's point, so if you can't even get Citizens and you don't want force place because it doesn't insure the homeowner at all.
Right.
What else is there?
Call your local ABC Roofing.
Roofing.
Yeah.
You got to get a
Yeah,
roof.
you
Okay.
got to get
Yeah.
the roof. And just to understand what force place insurance and why we're even talking about this,
Please, I'm sorry.
force place insurance is when you don't have an insurance policy, a current insurance policy,
And you
And
have
most-
a mortgage.
and most mortgage companies require that you have a certain amount of insurance on that property to protect themselves,
Sure.
right?
Absolutely.
And you also have to have the mortgage company on the
Policy.
insurance policy as a
A
what do you
loss,
call
loss
that?
payee
A loss payee. Thank you, Mike. And then
or the mortgagee.
right,
The same
because
thing.
your mortgage company, when you got the loan, you promised that you were going to keep the house fully insured to the standards that they want. So when you can't do that, the insurance company in the mortgage company in their mortgage note actually has instructions that say, if you can't get insurance, we're going to get it for you, and you're going to pay whatever we're charged. And that's why they call it forced place insurance. They're forcing it on you because you haven't
Or
complied.
you're forcing it on them.
Well, yeah, I guess
Right? In a
that's
way,
what
right?
the mortgage company would say. But the other thing that could happen is that they could accelerate the mortgage also if you don't have insurance, and they could, if they wanted to foreclose on you for not complying with the mortgage, and that's called an acceleration, which is basically a foreclosure.
Jeez.
That could happen to you. So this is like really, really big deal. When I was talking to Dan, our broker, who runs 250 agents in our office, so he knows, he's seeing everything all the time. We were talking about two big announcements. One has to do with down payment assistance, which we're going to get to later for buyers. But then I mentioned this the 5-year useful life, and he was like, that would be devastating to our market. He says, I haven't heard that, and that would be devastating to our market. And it can have really big ripple effects. We've been talking now for how long, guys? What has it been, 2 years that we're going through an insurance crisis? And we saw the writing on the wall very early, and we were talking about it.
Yeah, Ross has led us with a lantern down this cave.
That we
Yes.
have, and we've seen Ross looking very frustrated sometimes
Wait,
coming in here. It's
I
like,
thought Ross was leading us out with the lantern. Now he's just leading us deeper
The whole
into
time.
it.
Yep.
so this 5 years useful life thing is a very, very big deal, and I think it's going to get very tricky after a while, because really, if an inspector comes out and looks at your roof, and you have to determine if there's 3 years useful life or 5 years useful life, what are the differences in the roof that shows the difference between 5 years and 3 years? I almost feel like
I
we're
think
getting
they go
so
and they count the granules, and if there's at least 1,465 little individual pieces of granule, that has 5 years of life.
I know, it's crazy, right? Maybe
Is
they
that true?
maybe they go maybe
I was
they
going
go
to
to
say,
the
just
gutters.
re-sand it. Just, put some glue.
Glue.
Yeah.
Redo your
Yeah,
granules.
Throw some
and
rocks
this
on
whole
there.
thing is pretty crazy too, because a lot of the roofs that are being manufactured right now, I was reading the report off the article that gave us a really great overview on all this stuff we're talking about today. Metal roofs now, they're good for 50 years, right? Clay and tile roofs, clay and barrel tile roofs, those and cement tile and clay tile, 50 years.
Yeah,
Right?
but inspectors will go, oh no, the insurance company only is going to give those 20, so that's all we're given. And it's like, no.
Right.
You don't go by the insurance company's underwriting guidelines. You go by does that roof have X amount of years of life left?
And to me,
That's it.
that's where the rubber is going to meet the road, because at least Citizens, I don't know who else is looking at the 4-point like that, but they're relying on the home inspector, the certified, roof or 4-point inspector, to put the useful life, and then they go based on that, right? And so I guess sometimes they're sending out inspection crews after closing, but are they looking maybe some sort of quality control on the home inspector? But yeah, Jim. So what are they putting? Like, would they put 4 years? Can they, in their mind's eye, like say, hey, that could be 5 years. I don't want any complications with things. Yeah, it's got 5 years. Why not? I mean, that's really what it's going to have to come down to, right?
Yeah, I don't even know how they're going to be able to like really, and it's going to be like appraisals. It's going to be an art, not a science.
Yeah.
It should be.
And here's the other thing about that though. You can't even, one of the problems that I always have as a listing agent, like with Matt and Lisa, right? Their roof was 19 years old. We knew that we weren't sure what was going to happen with the roof. In fact, one of Matt and Lisa's buddies, Joe, who I met with last week, he confided to me that he didn't think I was going to be able to sell the house for the price I would put it on because the roof was, quote, so old. And he just thought it wasn't going to happen, but I got full list, right?
Right.
Now, here's the thing, though. If I go out today, Ross, and I tell my homeowners, go get a useful life certification and see what's going on with the roof certification for useful life, and let's say it comes back 6 years, and we're thinking, oh, thank God, right? Well, that report is written in the seller's name because they paid for it. But when the buyer comes, we're not allowed to give him that report and say, here, use our report, correct, Ross?
I mean, the insurance company is not going to accept a report with somebody else's name on it. The idea would be call these people and have them come out and do the report in your name.
Yeah, and that's what you'd have to do. So you'd actually have to pay the report twice. But if you don't do that, so let's say you get your useful life report and you don't know these little details that Ross has always taught me to make me a stronger agent, right? And then you go, let's say you have a good enough agent to say, even, why don't we do a useful life as we're putting it on the market to see what we're up against, right?
Right.
Well, a lot of agents aren't even going to know that you can't just transfer that to the buyer and say, here, use our useful life report, because you can't. They got to pay for it and do it themselves. And now you have two people, right? You have your people said 6 years, and then the new people say 3 years. Now what are you going to do, right? The one that's going to count, Ross, is
3 years.
the 3 years, because the buyer's paid for that. So this is going to be very, very tricky. And if you're thinking about selling a house and you have an older roof, or if you're thinking about buying a house and you don't know not just the age of the roof, but the condition of the roof, you're going to be doing some negotiating with a lot of houses in today's market, because I've been barely getting people by the skin of their teeth on 3 years useful life for quite a while now. I've been jamming them through.
And that's the thing. Like,
and now we're not going to be able to do that.
If you're a potential buyer and you go and you're like, oh, look, he gave me 7 years useful life. You got to know in your head in 2 years, you're going to have to replace that roof. And this whole thing is driven not because of the useful life of the roof. It's driven because insurers are treading water and drowning, right? Like, it has nothing to do with whether the roof is sound. It has to do with statistics and when are people making claims, and these insurance companies just have to remain solvent. And so how do they curtail the amount of policies they're writing? Okay, let's use this little, this tool as our measuring stick.
The good news is I think that if you have 5 years, they're going to give you the 5 years.
5 years of coverage?
Yes.
Oh, that's good.
That's
good
news.
news.
Because when I was reading it, and it's just a bulletin that gets announced to us, so it's not like,
this is a caveat,
hey, here's
Ross
how
thinks.
it works. But the language of it said something like, let's say it has 7 years, you're only going to get 5. So they're going to insure it for 5. Doesn't matter if it says 25 years. In 5 years, they're going to reevaluate it.
If that's the case, that's good news. That's good news.
That would be good news, but we're going to see how it's going to work out.
Yeah. So we're going through a lot of changes right now. If you have any questions about insurance ever, not just right here on the show, we'd love to take your calls. If you're having a roof problem right now, or you got an insurance problem dealing with your roof, pick up the phone and call us right now live, and we'll have Ross answer some of the questions live on air as best he can without knowing the specific situation. But we're available 24/7, right, Johnny?
We are, yeah, absolutely. FloridaTalkRealEstate.com. Were you going to say something?
No.
Okay. FloridaTalkRealEstate.com. It's your one-stop real estate shop. You'll find the hotline there, 888-973-7828. You can call that right now. You can call it 1 o'clock in the morning. 24 hours a day, 7 days a week, answered by a live body. 888-973-7828. FloridaTalkRealEstate.com. Facebook and YouTube. Remember, there's lots of information to be had. Great videos to be consumed as well. FloridaTalkRealEstate.com, though, is definitely something that you should be sharing, knowing, and using, because these are pros. Your one-stop real estate shop. 4-minute break. We get back at it.
Yes, sir.
Thank you for being with us on a Saturday. It's Florida Talk Real Estate right here on Real Radio.
Introducing the latest way to hear the greatest station in the world. Tell your smart device to play Real Radio 92.1 on iHeartRadio.
Hey, it's your boy Johnny C here, host of Florida Talk Real Estate. They're tops when it comes to helping people buy and sell houses. But Florida Talk Real Estate is so much more than that. For 5 years, I've watched these guys help thousands of our listeners with any real estate need. They couldn't do it without their sponsors, who are experts in their fields. Check it out. Jim DePola, powered by Keller Williams Realty. Their team specializes in helping people sell their house for top dollar, and buyers get great deals on the purchase of their home. That's what they did for me and my family, and I couldn't be happier that I hired them for my real estate transaction. Mike Rauch from the mortgage firm is one of our favorite guests on the show, and he is the mortgage guy. Whether you're looking for a refi or a mortgage to purchase a new home, Mike Rauch will get you the answers you need. The mortgage firm is licensed to do loans in Florida, Alabama, Tennessee, and Georgia, and they have local offices that cover all of South Florida. So if you're thinking about a refi or a new mortgage, go to the mortgage guy, Mike Rauch, and find out what he can do for you. The Mortgage Firm, Inc., NMLS 189233, Florida license MLD 78, equal housing lender. The law office of Paul A. Krasker has been specializing in real estate law for nearly 25 years and has the professional team you need. Upside down with your house, Paul's team can help you conduct short sales, loan modifications, even if you're behind on payments. They also help you with foreclosure defense and bankruptcy. They can even help you get a student loan modification and repair your credit to get the score you need. Paul's full-service team has helped thousands of our listeners, and they can help you too. Trident Title LLC is the largest privately owned title company in Florida. When you need a title company to complete a refi, home purchase, or sale, Trident Title has got you covered. Not only do they offer competitive pricing, Trident Title has attorneys on staff to make sure if you have bumps in the road declaring title that you can get the job done. Beware, not all title companies in Florida have attorneys on staff. Trident Title does and complies with all the new federal regulations released last year. Ross Komarinetz, owner of Brightway Insurance, has been helping our listeners get great rates on homeowners insurance plans. Haven't checked your homeowners insurance policy in a while? This is a great way to help reduce your monthly mortgage payment. Ross can also help with renters and auto insurance. Ross is only a phone call away and can usually get the answers you need same day.
Call Ross today at 561-425-6228 or drop by his office at 873 Donald Ross Road in Juno Beach.
So now you know why I'm happy to be part of the Florida Talk Real Estate Show, the longest running real estate show in Florida. And all these sponsors are just a phone call or a click away. Just call 888-973-7828. That's 888-973-7828. Or go to floridatalkrealestate.com. That's floridatalkrealestate.com. And don't forget to use the most accurate search engine to find your new home or ask for a free home valuation because floridatalkrealestate.com has you covered. That's floridatalkrealestate.com.
From the Anajar and Levine Accident Attorneys Studios.
Have you been in an accident? Call Anajar and Levine Accident Attorneys at 1-800-747-FREE.
That's 1-800-747-3733.
Real Radio 92.1 is WZZR West Palm Beach, an iHeartRadio station.
Download the free iHeartRadio app for all your music, radio, and podcasts. This is Florida Talk Real Estate with Jim DePola and Johnny C. Got a question for the show? Call us live at 1-877-927-6969.
That's it. Toll free, 877-927-6969. If you got questions, comments, concerns in the world of real estate, want to jump into our conversation, dial it up. We're live on the radio. We got another hour for you on this Saturday before we pass the baton to the locker room.
Oh, I thought Massachusetts Talk Radio was on next.
It will be only on our Massachusetts affiliates. Great to have you with us every Saturday. 92.1, 101.7 worldwide on your iHeartRadio app. We stream live on Facebook and on YouTube. That's Florida Talk Real Estate on both. And remember, Florida Talk Real Estate is .com, your one-stop real estate shop. Johnny C, well, that's me. Timothy's our producer extraordinaire. What's up, my brother?
Hello, and good morning.
Good morning to Ross Komarinetz with Brightway Insurance, Juno Beach.
You know that's right. Good to see everybody.
Good to have you with us. Mike Rauch, the mortgage guy from the mortgage firm. Nice to see you. Good to see you.
Whoa, good to see you, brother.
That's awesome.
You're like, where'd that come from? I was talking outside. I don't know.
I was expecting a puppet in your lap. I thought you were doing all Jeff Dunham on me. That was awesome. Can you do that again?
I don't think I can.
Damn, that would be cool if you could. And Jimmy D's with us, y'all. Jim DePola. I've told you for 11 plus years he runs a top producing Keller Williams team. The Florida Home Pros. You'll find Jimmy D. Jim DePola. How are you, my friend?
Hey, I'm doing great, Johnny. I'm so glad that everybody's here today. We're going to start off with that flooding down in Fort Lauderdale. Did you guys see what was going on down there?
Damn.
So how could we not?
Yeah, right. That was amazing.
I got calls
Oh my
from
gosh.
family and friends. They're like, "Hey, you okay down there?" I'm like, "Yeah, it's down in Fort Lauderdale."
I
up
just
here, we
can't
were fine.
believe how bad that flooding was. I didn't really expect it to be as bad as it was. I don't think I've ever seen flooding like that.
I
Shut
don't
down
think
the
anybody did.
airport
Yeah,
for a day and a half or something.
Jim,
That
I
was
had a
like crazy
buddy
town.
who happened to be caught. He was like in the cell phone waiting area at the airport, and he's sending video. He's like on an island, he's under a bridge, cell phone waiting, but everything around it was
Water
water.
rising.
He was stuck there. I was joking with him. I was like, "Be careful, man. Like people are gonna get hungry through the night. Like you got to watch out." He was able somehow to get out of there around like 10 o'clock at night. Like somehow he got through. He's got like an SUV. But I know that there were people there through the morning into, when did the water recede at certain places? I mean, they were
think it
stuck
was Friday
there
afternoon or something.
overnight, like at the airport. Just crazy.
Well, there was a father and a 3-year-old boy that got stuck under a bridge, and there were 3 Miami-Dade County, I think, police officers that were there and saved the 3-year-old boy and the father that were submerged
Rescued
in a car
him.
underneath the bridge.
Yeah, I mean,
Right? It just totally crazy. So that brings me to the next segment, which is rich people problems.
Okay.
So
Johnny.
So
Yeah,
right.
I thought we were going to
All
talk
about
about
you, Big J.
I thought we were going to talk about not only is we got problems with homeowners insurance. What about car insurance now? What's going to happen with these? I mean, I saw pictures of just cars and cars like submerged in water. What's going to happen, Ross?
Yeah, that's comprehensive coverage right there.
Yeah, that's true. That's true. But what we're talking about, Mike, is we're
Sorry.
talking about is is seawalls, right? So most probably you're going to be in a wealthier neighborhood if you're dealing with the seawalls. And in Broward County, 2 years ago, this last month, they passed a regulation directing certain cities that they got to clean up their seawall acts so that we have better drainage and protecting the community from flooding. And so let me see some of the cities that were involved in this regulation.
That's what they're blaming.
I'm sorry.
They're blaming the seawalls.
Well, the seawalls to protect more damage, to protect more damage. So right now the regulation is that the seawall is supposed to be 3.6 feet above sea level or something like that. And now they're raising it to 5. And there were certain cities that the county directed saying, you got to check out your seawalls in your communities and find out what's going on with them and see if they meet compliance, the new compliance. So Hollywood, Dania, Hallandale Beach, Davie, Deerfield Beach, Pompano Beach, they all kicked, and Oakland Park and Lauderdale by the Sea and Wilton Manor. So a whole bunch of cities, okay?
Yeah.
They were all directed to deal with the seawall problem. Now, Fort Lauderdale finally stepped into the mix because they're forced to do this, and they didn't have a good city commission meeting about this. There were a lot of residents that were very upset. So they were freaking out that they're going to have to replace their seawalls. So you don't necessarily have to replace your seawall except for 3 reasons right now. Number 1 is if your seawall is so low, even if it meets the requirement, if water's coming over and spilling into your neighbor's yard or into the streets and the community streets and things like that, you've got to redo the seawall.
And this, just to clarify, like seawall, it's not just on the sea, right? We're talking any of the
Intercoastal,
the canal systems,
yep,
intercoastal,
yes,
like all of that.
Yeah. The other thing is that if 50% of the structure of the seawall is considered damaged, you're not allowed to repair it. You have to replace the whole seawall, and you have to do to current code, which is 5 feet, right? And then the other reason is there were three reasons. Let me see.
When you say the
even if the seawall's in good shape, but the water is coming over and spilling into your neighbors or the community, you have to fix the seawall.
So you're responsible, like if you're on the water, wherever waterfront you are, you're responsible for your property line seawall, right?
Mm-hmm.
What if if you're in disrepair, your chunk, you have to build it to 5 feet. What if the rest of the seawall around you isn't on that level? You still have to get that built up.
It sounds like, according to the article we did, and it's expensive.
Sounds like a good business to get into.
Yeah,
right?
Well, it's the estimate I'm getting this from the local newspapers. I'm not mentioning where my sources are coming from anymore because Facebook is driving me crazy with algorithm things. So I'm not mentioning where I'm getting my sources anymore. I'm done with that. But anyway, one of the local newspapers explained what was going on, and if you don't do the cost, talking to seawall builders, if you will, is somewhere between $1,200 a linear foot to $2,000 a linear foot. So if you have 100-foot exposure, you're
Not that
talking
much.
about 120,000 to 200,000 to put the new seawall on. Okay, so this is going to be a very big deal for people that own houses with seawalls. Two things are probably going to happen. First of all, if you're living in the house and you can't afford to rebuild or they're going to force you to, there's going to be people that are going to be selling because they're going to be done and say, I don't want to deal with this. And they just want to sell it and kick the can down the road to the new buyer. Okay. The other thing that could happen is that the buyers, when they're buying properties, they're going to be much more careful, just like useful life on a roof, and see how that seawall's doing. And they're probably going to be negotiating seawall costs more than they have in the past. They're going to probably be out there and go, hey, the seawall's not going to meet code. We need to deal with this. So let's start negotiating it now.
Well, the good agents.
And if you don't do it, it's going to be $100 a day fine.
Isn't in the contract something about the seawall?
There is. There's stuff in there, and it should be part of your inspection if you do it right.
They do a seawall inspection.
Yeah, but normally what happens is during those inspections, they tell you how good of repair or disrepair your seawall is, and sometimes you do negotiate it. But now with the new regulations, it's going to be, much harder to get out of if you're a seller. It's going to be something you have to own up to, kind of like an older roof. So this is all deferred maintenance issues.
Is there any way to DIY a seawall? Is that, I'm just like seriously,
I don't know.
Like potentially a homeowner could put on their own new roof, right? Like
Right.
that's something that's
owner
possible
builder
to do.
Right.
Is it
owner-builder.
possible to DIY
I don't know.
a seawall?
I don't know because you have to get federal, you have to get, I think it's the Florida Inland Navigation District FIND is one of the agencies that you got to get approval when you do a seawall, if I'm not mistaken. So I don't
maybe
even
you have
know.
to be like certified,
Yeah.
like seawall
Mhm.
construction.
So
Probably because they're polluting the,
and it's got to work, right? Like a failure in that is a major problem, right? Like
Yeah.
if you don't,
true.
Yeah. So
And here's the other thing is the cities aren't messing around with this. The city of Fort Lauderdale spent about $55,000 to buy a boat, and they're going to have code enforcement doing sweeps, if you will, just like they do neighborhood sweeps. Now they're going to be going on a boat and going through the backyards on the water to check to see if seawalls are in too much disrepair, if there looks like there's an inordinate amount of flooding or water movement. They're going to start slapping people with notices, and you have 1 year to fix this. And if you don't fix it, it's $100 a day fine.
Jeez.
Now, the residents in Fort Lauderdale went nuts, and they were pretty upset, and they were really yelling at the city about this. And you know what the mayor said? The mayor said, this is calling the local news sources. I wasn't in the meeting, but the mayor said, how can you blame us for something that the county is forcing us to do? Because it was really a county ordinance that the cities are complying with. So they're getting all the grief, but the county was the one that made the ordinance. But, after this flooding event, I can almost understand why they made this ordinance, after what we just saw with the flooding event. But even if it was up to 5 feet, I don't think it would have made much of a difference.
Nah.
And
I would be terrified if I were a resident in one of these communities that had the rising water issue. I would be terrified because this is the moment where like city officials and county officials start to take action and stuff. And like this was a freak event, but they don't have the luxury of saying, hey guys, it was a freak event. Don't worry about it. Now they got to start doing stuff. And what are they going to do? Something that costs money.
Yep.
Yeah.
Something that costs taxpayer money or whatever.
I always say, if you're going to buy on the water, get the longest loan possible. Don't buy cash because you're probably never going to be able to pay it off because it's going to be underwater before the loan ends.
Well, if we're looking for a business opportunity, so seawall construction, seawall financing, something like that. It seems like, hey, think about it.
So
come on, Johnny, you and I.
Yeah.
Go to Home Depot, get a whole bunch of rebar and cement.
I'm listening to this going, I might be able to bucket list. Yeah. Always wanted to rebuild seawalls.
Here we go.
Are seawalls covered under any insurance policies?
Typically not.
There'd be exclusions
just
there.
because in Florida they have like if on your homeowners, if it's damage from, wind, like waves hitting it and things like that, water pressure, then that's excluded and typically falls under flood insurance, but flood insurance doesn't cover seawalls. And then typically you're talking about maintenance issues at that point too, with, right now,
Yeah. So, very big changes happening in Florida on so many different levels. I just feel like we're going through a major demographic change. We're going through demographic changes. We're going through income changes because of the type of people that are coming down. And I cannot believe how many people are leaving South Florida. It's really amazing how many people I'm talking to who don't know where they want to live. They want to sell their house down here. And they're like, I don't know if here are just recent examples all over the place, right? I've talked to people that wanted to move Lake City, Pensacola, Palm Bay,
We got
Jacksonville,
Georgia, South Carolina.
Yeah, I'm just talking even locally
within
at
Florida,
first, just
sure.
locally at first, right? Then they're thinking St. Augustine, Jacksonville, right? They're thinking that. Then I'm hearing people that are thinking of selling their homes and buying mobile homes right now, which I was really surprised to see that. I haven't seen
Dude,
so
I'd
many
live in
people
one by the
talking about
beach.
mobile
I would.
homes. I haven't seen this many people talking about mobile homes since I became a realtor.
I think that's just an affordability thing.
It is. It's a
mobile
total-
homes are some of the lower priced homes, even though they're expensive compared to what one would think.
I was looking at Hope Sound for a couple. They were trying to buy a mobile home for 180, right? They could go up to 200. I couldn't get them one.
Yeah.
They're looking at 220 to 280 for a mobile home in Hope Sound.
And do they own the land? Or?
Yeah,
Oh,
that's with
that
owning the
price.
land.
There's a little park across from the Juno Pier
Mhm.
that backs, it goes from US 1 all the way to the preserve.
Mhm.
And those are like 250.
Yeah. Yeah, I know exactly what you're talking about in that area. So we're going through all this stuff here where people are just trying to find affordable places to live, right? That's what happened. I read an article in one of the local papers recently that people are commuting an hour and a half down to Broward County from this new city called Ava something or other, Ava Maria something. I know that's a song, a religious song, but whatever. But it's Ava something or other, and it's a developer built community right now, and the homes are relatively affordable, very family oriented. They're building it as a very family friendly community, and people are saying if they don't have to commute every day, they only have to commute, let's say 3 times a week or something. They're like, heck with it. I don't mind a 90 minute commute one way or the other.
I know some firefighters that live on the west coast of Florida, but they're like Miami-Dade or Broward County firefighters, and they'll all just drive over, 3 of them in the car, do their shift, and then drive back.
Yeah,
because their shifts are 3 days on, 3 days off type of thing.
And the other demographic shift we're going through is exactly what Mike says. So besides all those people trying to figure out where in Florida they would live if they can't live down here, then you have people going to North Carolina, South Carolina. These are people just recently I've talked to. We have Massachusetts, Matt and Lisa, right? We have North Carolina, South Carolina, Georgia, Tennessee. Though North Carolina, South Carolina, Georgia, and Tennessee, I'm seeing a lot more lately, a lot more. And in fact, we're trying to help somebody buy a house up in Georgia. But
that's where the peaches come from.
But here's the interesting part is they're where they want to work. Oh no, they wanted to move to Alabama.
I was going to say you're leaving Alabama.
I'm sorry, but I don't get there's another one, Alabama, but that was my first Alabama in a while. But I also had somebody last year, Mississippi, right? So everybody's moving out of here and trying to find lower cost places and feel like they can get a job somewhere else. But the one that was in Alabama, they mentioned to me that they found a couple places on the border on Tennessee. And then I looked up right away what the income tax was, the state income tax in Alabama, because I know Alabama has a super high income tax for state because of the low income. They have to get money somehow to pay for all the services. So I said Tennessee.
So tax the low income higher?
Well, usually what happens is the poorer states have higher tax bills, right?
Yeah.
So to pay for all the services. So what I mentioned to him is like, you might not, I think he wants to move to Huntsville because of the Rocket City, because all the tech jobs there.
Okay.
But he could move to Tennessee and be right on the border and commute to Huntsville. So I was like, you might want to focus on that area of Tennessee because you're not paying any state income tax. They were so happy that I mentioned that to them because they didn't even think that way.
If they're close enough, pick
Listen
one
to us
versus
on
the other.
Tennessee Talk Real Estate.
Yeah, there you go. Tennessee Talk Real Estate. So a lot of demographic changes going on right now. And this is just another thing. I think the homeowners insurance thing is going to make people just say, I'm done, right? The people in the floods, I read a quote in today's paper that says, I can't take another event like this, right? So that quote was like, sounds like those people are ready to move out of the area and not deal with the drama that's happening.
What's
down
crazy
here.
is there's 10 people trying to move into their house.
I know. It's so
One
true.
out, 10
So
in.
that's why I'm saying we're going through a major demographic shift. It isn't that everybody's fleeing. There are a lot of people coming down also. But what's happening is I think that people that can't afford this area are leaving to find jobs somewhere else. And the people coming down have more money. So I think what we're seeing is that we're going to see the demographic shift of higher income people living down here. I just hope we don't get like San Francisco, but that could happen.
Man, there's a corner lot on US 1 and Donald Ross. Kind of my plaza kind of straddles the lot. And it's been vacant for a while. They announced that they're going to put condos there starting at 3 million sold out.
Yep.
So they're coming from somewhere.
Well, here's something else I'm reading, and this is what I'm going to keep an eye on, is that I'm hearing rumblings that the commercial side of real estate is starting to get a little weak, right? And I read an article about City Place. I still call it City Place, but it's the Square now.
Or it's just the Square
It's
now.
just
It's not
the
If
even
you would have
Rosemary
said the square, I would have had no idea what
Yeah,
you're
that's
talking
why I
about,
call it
so.
City Place because everybody, that's
Well,
what
it
they
went to
know it as.
Rosemary Square,
Right.
and
Now
now
it's the
it's
Square.
the Square.
The
'Cause
Square.
it's like I think they realized, oh, maybe we shouldn't mention Rosemary.
Yeah, what's happening? What's wrong with Rosemary?
Yeah.
What happened to our daughter?
exactly. So
I don't get it.
So
It's kind of hood adjacent. The Square. People don't realize that right behind it is not the best area.
I got you.
Tamarind
Yeah.
Square.
The block.
it's very
Yeah, the
blighted
block by
over
block
there.
analysis.
Yeah, it's very-
It's
it's
right. It's super hood adjacent, but it's
Mhm.
hey, it's been one of our gems in West Palm for a long time.
It has.
Although it's going through changes again. I
And
know
they
always going
just
through
AMC's
changes.
going.
they Stephen Ross from the Miami Dolphins owners, Miami Dolphins owners, related not related. I'm sorry, I don't think he's related. Is it related
think he
companies?
might
I
be.
don't think
I
so.
think so. For
Oh,
some
maybe
reason.
it is. I felt like a
But he's a big time developer.
yeah,
Oh,
big
yeah.
time developer. I can't believe I'm having a brain fart on that. But Stephen Ross is actually doing, I think, a $200 or $300 million commitment by building these office towers in the Square. And
The theater's coming out.
and I heard they're losing the
Yeah.
theater, and maybe the comedy club might be going too. I read.
Well, I think they're underused.
Yeah.
Unfortunately.
Yeah, which is unfortunate. I always wanted to take that
really?
comedy class you took.
A friend of
I
mine
wanted to
did.
take that class.
I didn't take no
I
class.
thought you took the class to be comedian.
No,
I would have thought you did.
Oh, I thought you
No.
did that. Did
no.
you do that?
Wait, you thought I failed it?
I thought you. I think it's like a 6-week class.
No, I probably should have. I
Oh.
got on
All-
stage a few times.
all
maybe we'll do it
natural.
again.
Yeah.
I,
Maybe-
Out
listen,
the womb like
I'll
this.
I don't know if there's like, I feel like City Place, ever since I moved down here in 2005, end of 2005. And I feel like City Place has always gone through a little bit of
Changes.
struggle and changes,
Yeah.
like keeping their shops open, right? There was the blues place up there that I know had right next to the comedy place and the theater. I feel like there's always been shifting.
There's been a lot of turnover
Yeah,
up there,
yeah.
up
There
the
has, but-
stairs.
And
Yes.
all the retail places are always constantly.
Yeah, they're always moving. But what I found surprising is that the article I just read about that new development that they're putting up there, people are complaining because they said the office space that we have now is not being filled to capacity.
Yeah.
Why
So
are we
I don't
building
even
more?
understand what's going on with that because a lot of people are saying that the commercial market's very strong right now. And then I'm hearing other people saying it's starting to get weaker. Now, this is why I'm bringing this up. Commercial real estate always goes first if we go through an economic downturn in real estate. So if commercial, if it usually goes down before real estate, but residential. And then residential follows the cycle. And then commercial usually is the first to bounce back in a down cycle. So we might be seeing a rumbling of what could happen.
But is
in
it
the
commercial
future.
in South Florida? Because I know nationwide, a lot of those big office buildings are struggling with,
since COVID, right?
vacancies.
Yeah, but they're talking
And
about
so-
specifically downtown
Okay.
West Palm,
Yeah.
specifically. Now we're hearing about all these tech firms coming in and everything, which is bringing up the value of all the properties in a way. So we're going to see what's going to happen. I just feel like we're in very choppy water still, very choppy.
I don't know enough about it, Jim. My gut tells me that the commercial side is a very long game. Like it's not this year, next year, 5 years. It's like what's the 20-year plan? What's the 30-year plan? So they have to be able to get through these cycles. I mean, and not whatever. There'll be change of ownership, even the development, right, has been stalled a little bit, even on the Ross projects.
Yes.
Like during COVID, it was stalled a little bit, but it's just such a longer game than the residential one.
Yeah, it's going to be really interesting. There's a lot of big players in downtown West Palm right now that have at least earmarked a ton of money down there. So we're just going to see Jeff Green's project.
Those are good signs. Those are people that usually, are wise with their investments typically.
Right.
I'm optimistic. It's not all doom and gloom. You talked about, so the big insurance, the seawall thing, that only applies if you have a seawall, right? The roof problem only applies if you have a roof, right? You said that. You said that earlier. So we're fine.
Yeah.
Right?
As long as you don't have a roof, you don't have to worry about anything, right?
Jimmy has no concerns.
I'm great. Yeah, this is awesome.
It's funny. So let's talk about a little bit of good news.
Well, let me share some really pertinent information. As you may be listening, I have pros that work with us every Saturday making radio. You can access them all at floridatalkrealestate.com, the one-stop real estate shop that is floridatalkrealestate.com. Pros, you get them all one click away. Remember, on Facebook and YouTube as well, Florida Talk Real Estate. And you can always join us when we're live on a Saturday, 877-927-6969. If you're not comfortable on the radio, totally get it. I never will be myself. Go to floridatalkrealestate.com. It's much easier that way. Nobody's listening.
There you go. Thank you, Johnny. Thank you.
Wait, people are listening now?
Yeah, millions.
I'm not.
Hey,
saying another
Timothy,
word.
if it's okay, we're just going to plow through the last half hour, okay?
Let's go.
Because we're running a little
Let's
behind.
go.
Okay, so I want to talk about some big news, but before that, I want to talk about good news that's happening right now, and then big news in the mortgage field. Okay, so the first thing is that I read an article compared to November. We just had one of our buyers buy a house, actually a townhome, for a $300,000 price point. Right, Richard and David. Congratulations! They closed 2 weeks ago.
Robert,
did I say Richard?
You
I
did.
just said Richard. I don't know why.
Are you protecting
I know.
anonymity or
No,
just messing
I
up?
should have said Robert. Sorry about
Okay.
that, Robert. So they just closed on a $300,000 home, and it made me feel good when I read this article. It's like, oh, that's Robert and David. So if they had bought the home in November, they would have paid $140 a month more than they're paying now on their mortgage payment, because the mortgage rates have gone down from 7.08 in November down to this week. We had our 5th drop in a row for mortgage rates. That's tied for the record of the year of 5 drops in a row. We only had one other time that's happened this year.
In a row.
Of this year, though.
Of this year.
But it's
of
still
this year.
April.
Yeah, but still, that's 10 weeks. Think about it. 10 weeks of the year we've been going down. Some weeks we've been going up. But the last 5 weeks we went down to, we're at now 6.27.
You can't go down if you don't go up. So
No.
we got to go up and then come down. Yeah.
No, not necessarily. Where we are now, we can go down a lot before we can go up. So unless we get into negative. So right now, it actually is not a bad time to buy, right? A lot of people are thinking it's a bad time to buy, and really it isn't. The interest rates have been pretty flat for the last 5 weeks. So if you started your loan qualification and you were ready to go, you could have kept your powder dry. And then as the rates started dropping, really get heavily in the market and see what's out there,
Your
right?
powder dry. That is a dated reference.
I know,
by
but I
the way.
like it.
Man,
I like it, man. I like that.
keep your
one.
powder dry.
Keep
Yeah.
your powder dry.
talking about gunpowder. Right?
Yes,
Yeah,
gunpowder.
not your-
That's in the American
Not your
Revolution.
foundation.
That was the American Revolution thing.
All
Keep
right.
your powder dry, right?
That's
So you
what-
see keep the powder dry. Wait, don't fire till you see the whites of their eyes. Remember that one?
So I
So-
think what Jim's saying though is if you've been in the market, like shopping, and been a little bit frustrated with prices or frustrated with interest rates, you've got some relief in that factor.
Yes.
Matter of fact, if we're talking about good news, if you're an FHA borrower, you got relief on your mortgage insurance. I think we brought that. Yeah, we talked about that in a previous show, but you got basically a quarter of a point, 0.3% reprieve on the interest rate just with FHA's change. and rates have been,
Going
not
down.
sound like super declines, right? We're probably where we are now is where we were at the beginning of the year,
We're
right?
only
Like
down
January.
0.21 from the beginning of the year. We're
Yeah,
only down
yeah.
0.21. So we've been pretty flat. We've been basically between 6.25% and 6.5%
Yeah.
throughout the whole year. But that 0.25% is 2.5% of your purchase power.
Yeah.
Right.
Right.
So all things being equal, if you go up 1 full point, 1.0 on the interest rate, you lose 10% of your purchase power. So a 0.25 points, 2.5%. So just the FHA reduction in the PMI,
Mortgage, the monthly mortgage
right?
insurance.
That helps you with 2.5%. If we went down a 0.25 point for the beginning of the year, there's another 2.5%. You got 5% more purchase power,
Just like
right?
that.
And you might not even need it in today's market because people are selling their houses at lower price points than they were before. We're not having huge bidding wars. Usually, some houses we have, but most of the houses aren't bidding wars. And the average days on market right now is in the 40s, right?
Yeah, and
40 days on market. So you have time, and you can reason and find the deals.
And it's still competitive, Jim, at maybe like the lower, not lower. It's not even lower, but the more affordable price points. It's still competitive there,
Very competitive.
but where it may have felt hopeless before, now there's some hope, right? Like you can kind of sit back, you can just wait for those properties to come on the market. You still need to be able to move quickly when they show up because they are getting, they're hot property. If you're looking in Palm Beach County around that 300,000 mark for a single family or even townhome, it's still tough out there.
Single
right?
family is almost impossible.
Yeah. Yeah.
But the thing is, like Robert and David, their house, the last two sales before them were 10% higher than what they paid for, and the sales were recent, so they got 10% below what the other two people paid.
Yeah.
And the house, we didn't have a bidding war. We looked at it, decided to make an offer. We gave them full price because it was 10% below everything else, right? So we needed a house, so they were willing to pay that. They felt it was reasonable. But it wasn't a bidding war, and it was at $299.9, right? So we were able to go in there and negotiate and get it done. So that's really, really good news. So right now we are getting a little reprieve. How long is it going to last? Who knows? The last time we had a 5-week decrease, the last time earlier this year,
Don't say it.
we had 4-week increase, right? So, and then we went down 3 weeks, and then we went up 2 weeks, and then we went down 5 weeks. So we're in a really choppy water right now. So my bottom line on that part is, if you're a buyer, get qualified now and know your numbers and be prepared to strike when you find a good property. You don't have to buy anything. You get know your numbers through Mike. We set up the searches. When you find a house that's like, yes, that's the one, then you go in and do it. But until then, you just keep your powder dry and you just keep your eyes open
But
and
be
see
ready.
what's going on. But be ready. You got to be poised because you're going to be kicking yourself if you don't do it that way.
Jim, when we say be ready, we're talking about, listen, you have to, if you're going to need a loan, you got to know whether or not you're going to be approved and the parameters under which you should be searching based on the money, right? Now, I'm not talking about bedrooms, bathrooms. That's another part of it, but you got to know price point. You got to be able to calculate payment, right, on the fly, right? You got to be able to know if you're going to qualify for the payment so you can plug in the house price, the taxes, all this stuff and make sure it works. So that's one part of being ready. The other part is you got to have had a consultation with your trusted real estate agent and set up your search parameters, and you're getting pinged on homes that match your criteria. And if it looks interesting, make sure the numbers work, set up an appointment to go see the house, and be ready to make an offer if that's the one. And so that's what being ready means, Jim. It doesn't mean you're out there shopping every week, and it just means you're poised to be able to shop if they come up, if they have come on your radar.
And even when you're ready to make that offer, that's making sure that the insurance is going to be affordable. Like there's a lot of moving parts. FloridaTalkRealEstate.com has got you covered. These are pros. You get them all at FloridaTalkRealEstate.com, your one-stop real estate shop, FloridaTalkRealEstate.com.
Thank you, Johnny. And I want to switch over now to big news for buyers. Buyers have been pretty beat up in a long time, and we're talking about how it's been kind of relaxing for them a little bit, even though that we're stung with these higher interest rates than we've had in the past. But we've been talking about the Hometown Heroes program.
Yeah.
Now, if I'm not mistaken, Mike, did Robert Robert use the Hometown Heroes
Yes.
program? Yes. So
Yeah.
he used the Hometown Heroes program.
He was
So-
a double qualifier, even though
because he
he's-
was a veteran.
He's a vet, and he's also in a profession that was in the covered list of professions.
Right. So that's what I wanted to talk about. Up to this point, the way the Hometown Heroes program works, which is a state program, it's state backed. The state will give you up to 5%
Of the loan amount.
of the loan amount, no more than $25,000, right? Max, to help pay for your down payment and closing costs. And the qualifications is you had to qualify for conforming loan, right? FHA, VA, or conventional, right, Mike?
That's right.
And you had to have a certain type of profession. That's why they call it the Hometown Heroes program. And they expanded it to like 131 different professions or something like that.
Yeah, kind of maybe like the traditional way people thought was like police, fire, like first responders. And so Hometown Heroes, when it came out almost a year ago, was an expansion of that concept, right? So it included a lot of medical professional fields that weren't included before. It's
Teachers,
still
government
teachers,
workers.
yeah, police, fire.
But also like medical, like chiropractic assistants and
Yes.
dental hygienists.
That's
and
right.
all those people could get this 5%, which is really helpful to people.
And there were people, like I would talk to the hospital, who were in professions that weren't qualifying, because it kind of looked like if you had to have a state license. So those people are like, oh my gosh, I see all my colleagues using this down payment assistance program. You have to say, yeah, but you're not. So still there was some of that, like, hey, you're in the field, you work at the hospital, but you're not in the
For
field.
example,
that-
like
that
medical
works.
billing.
Yeah, exactly.
If you did
Or
medical
administrative.
billing, right?
Yeah.
You couldn't get the Hometown Heroes program. Well, now I don't know if they're going to continue calling it the Hometown Heroes, but there was a new state law that was passed just recently, and it's called Live Local. It's the Live Local Act, and there's a bunch of stuff in there related to trying to help people with the housing crisis that we're having down here. But now it's expanded. Listen to this, guys. Everybody is qualified. Every profession is qualified for this program now. Think about that. Anybody. So the only requirement is an income requirement, and also that you have not owned a home in 3 years.
So yeah, I'm a little bit, not all the details have shaken up, but what they
that's
did
true.
is they took the Hometown Heroes program and they actually wrote it into law. So it is now codified in the books, right? And it, instead of being a hometown hero, the main thing is like it's no longer based on a qualifying profession. It's based on being a Florida resident and working full time in a Florida-based career job, right? So basically, all Florida residents are qualified for this down payment assistance program. There are some requirements, some guidelines you have to follow. One of which Jim just mentioned, it's for first-time home buyers. So this is a first-time home buyer down payment assistance program, which simply means you haven't been on title to any property in the most recent 3-year period, right? And it doesn't mean like, hey, I sold it 2 years ago. No, that you can have owned a home in the past 3 years. Jim mentioned income. There's always, these programs typically have some sort of income limitation. That detail hasn't come out yet. So right now, as of right now, there's still income limitations. And hold on, back up. This doesn't go into effect. The new law doesn't go into effect until July 1st.
Usually it's July 1st when they pass
And
the law.
I don't know how that's going to, like, part of this program is you register, like in the early stages of the loan application, you register for, you take a slot, right? So you basically reserve your funds because it is a funded, program. You reserve your funds. I don't know when they're going to start accepting reservations under the new program. So that hasn't come out yet. All the underwriting guidelines haven't come out yet, but I got to think it's still going to be income, like some sort of income limitation, but it could be that there's no income limitation. I don't know.
So just to give you an example, like if you were buying a $300,000 property, now we know taxes and other things can affect, but if you were buying a $300,000 property, we just did one recently. And the total down payment and closing costs was like $30,000, roughly $29,000 and change. So they got 5% of the $300,000 from the state of Florida. So that's 15 grand. So they only had to come to the table with 15 of the 30 grand needed to buy that particular property, right? So
yeah,
that's
not the quibble. Just it's 5% of the loan amount. So
the
depending on
loan
how
amount,
much
not
down
the
payment you're
purchase
doing,
price.
yeah.
Oh, it's the loan amount.
Yeah. So if you do a $300,000 loan, you can get up to $15,000 towards down payment, closing costs, prepaids, all of that. It's kind of like the buyer side cash obligation,
right?
Which is a big amount.
Yeah,
That's huge for people.
Yeah.
Yeah.
So this is a way to get in, guys, First of all, we got lower interest rates right now. We don't know how long it's going to last, right? We have the lower interest rates compared to where we were last year, right? And now we have this program where it isn't profession specific. So anybody that's been sitting on the sidelines, you got to check out these programs and see what's available.
Yeah, and just like if like the thing it goes into effect July 1st. I'm not sure when it's going to start being applicable, but there are also down payment assistance programs out there right now that, like, the standard one is like what Johnny had years back at $10,000, right? And that can be the string with all of these programs is that it stays attached to the home. So you do need to consider that essentially equity position that you don't have. So it's like, hey, Jim, I'm going to give you $10,000. Don't spend it. I just want you to hang on to it, right? Just hang on to it. And if you ever move out or sell the home or refinance, I need that 10 grand back, right? So you do have to consider that. That is a string. But what traditionally I haven't liked about the down payment assistance is you usually get a penalty on the interest rate, right? Like the interest rate you're getting with these programs is higher than it would be if you didn't have them. That's no longer the case. So I really, really like these down payment assistance programs. Oftentimes, Johnny, the barrier for people being able to buy, you know, we talk about the affordability crisis. Well, part of that is like, how do you come up with all the cash that you need to buy?
Sure is.
Like that. It's very hard if your budget is restricted, very hard to put away the multiple thousands of dollars that you need over time to be able to buy a house. And so this really does help people get into their first home.
It really does.
Yeah, they could be fiscally responsible. They could have great credit
It's just
score.
hard.
They could really manage their costs on a month-to-month basis, but they can't just quite stack enough cash
Let's say
to be able to.
average family, like even maybe this isn't, are you able to save $500 a month?
It's tough,
right? Like, are you able to put away $500 a month and not touch it? If you can do that, then you're putting away $6 grand in a year. You probably got to do 3 years of that in order to even have a shot if you were to cover all your costs and everything.
Right.
So it's just really, really, it gets people over the hump. They got the qualifying credit, the debt to income's right. It's just the cash. And traditionally we'd be like, well, do you have family that can help? Hey, what can you get from the seller? All those tools would still be at your disposal, but you now have, and hope this is a really big one, it's going to be for everybody, right? For everybody. But caveat, Jim,
you're going to run out of money.
The fund, it's available until the money runs out. Now, we talked about this last week.
Yep.
And I had some numbers that I thought, and I was wrong on those numbers. So it got funded. The initial round was $100 million. I said something like $1 billion last, and half of it had been used. So somehow I was reading something wrong. So it was $100 million. There's probably something like 20 million left from that original funding, right? And it's been profession restricted. So over a year, they haven't used it. They got some leftover, but it's been restricted to the profession. Now, there's not going to be a restriction. So how long is the 100 million going to go? And once it's out, and I think they fund it year over year, it's meant to be an evergreen program, meaning they're going to refund it. Like that's the idea.
Why make it a law if you don't, right?
Well,
yeah.
Well, but like the best down payment assistance program we've ever used here on the show was Port St. Lucie. Port St. Lucie had a specific one where you got $15,000 and it was forgivable over 5 years if you kept your payment clean.
That was a county deal, right?
Yes, but
I don't know. It was actually
yeah.
It was funny. It was funded through Lee County, and then Lee County was able to distribute these funds to other counties. They had some sort of cooperation with
US
Port St.
Bank
Lucie,
or something like that.
So, but that one was amazing because that string that was attached, it got smaller and smaller until after 5 years, you no longer owed that. And so that was amazing. I've heard, Jim, that this program might be similar, although I'm not buying it. Those details haven't come out. And one of the ways that they will fund the ongoing program is that as people repay the loan, if they get into that position where they're selling the home and they have to repay it, those funds go back into the pool. So I'm thinking, like, in my mind, that making it forgivable really takes a chunk out of what they're able to fund to the program in the future. So I'm not sure.
I'm not sure they're going to do that
it's
either.
early. It just got signed into law the end of March. All the details haven't come out.
Yeah.
So, but be ready. If you're like thinking this summer is it, be ready to take advantage of it if you need it. That's
the forgivability aspect,
the sooner the better,
is awesome. But let's kind of face facts here. It's man, it feels like something they should wipe away. It doesn't feel like we should just I like the opportunity to be able to like, here's a big assist to get you into home ownership for the first time. That's amazing.
Mhm.
But to be like, here's just free money, doesn't feel like the way to set it up.
No,
it just doesn't.
Yeah.
Well-
I think it's going to be like, if people lose sight of the fact that that's equity position they don't have, they can get stung hard on that. And so you just have to be cognizant that, your home value, your potential proceeds when you sell is less whatever you owe. So if you get 25,000, I mean, that's a big number to think about, but if you never lose sight of it, you always keep your eye on that ball, you're going to be okay.
Well, not only that, when have we not had 5% appreciation? What year have we not had 5% appreciation in 1 year, right? The last time was like 2014 or something. So the 5%, your equity is going to grow. Things can happen. I'm not guaranteeing this, but
even if
based
it's
on
only 3%,
history,
let's say 3%.
yeah, based on history, 2 years for sure. You've got enough equity to overcome.
I would say
that
this
amount.
though, like if everything goes well, that's fine. If things go bad, guess what? You're not selling your home anyway, because you forget about what the money that you got as the grant. Like your home value, if it really goes down, why would you sell anyway? Right? Like, why would you ever be you have to wait for the values to be right in order to sell. So
it's the fiscally responsible aspect, right?
Yeah,
if you're going to be responsible in your timing, you don't want to sell and lose a bunch of money, right?
Or you can't. I mean, you might not be able to.
Right.
I'm going to be putting out, we have tons and tons of people that said they've want to buy in our database. Johnny knows this, just a ton of people that have just been waiting on the sidelines, not ready to pull the trigger. We're going to start a massive information campaign to let those people know. I don't know how much better you're going to have than this situation. You cannot believe how many people I'm talking to on the phone every week that's like, yeah, I think the economy sucks. I think the real estate market's going to crash.
I think it just depends on what they read,
Yeah, and it's just like what they read. I was talking, we had
Where they
dinner
read
with
it from.
somebody recently, and they watch a particular news host. I don't want to get into it. And that news host, I follow that person a little bit, and they're so doom and gloom on everything. And they've been doom and gloom now for 15 years, expecting the whole world just to collapse every single week. That's his message, or every single day.
Still not happening.
And it's still not happening, right?
Are you talking about the guy that was mentioned when we were out on Thursday?
Yeah.
JB.
Yeah. So not JB, it was a different but anyway.
GB.
Yeah,
Sorry,
but
GB.
But what is it? The broken clock is right twice a day,
right?
Kind of thing. So who knows? But right now we're not seeing anything until, like, I'm going to keep pushing it, guys, until you start seeing unemployment go up, which means that people are going to be struggling to make their payments, or you see the unemployment, and then also possibly foreclosure rates, which are non-existent
Default
right
rates.
now.
Watch
Default rate,
rates.
yeah, default rates. Not really seeing too much stress out there right now. Consumers have scaled back. We're going to get into more about this next week, but consumers have been scaling back a little bit on their spending.
I saw those headlines, Jim, and I'm thinking the cynic in me is like, okay, what's the agenda there? Like, what's the agenda? Obviously, it's the inflation conversation, right? So, look, consumers are scaling back on their spending. Inflation must be it's being tamed.
Well, the inflation supposedly is down to 5%, annual 5%, which is great because we were at 9%, 2 years ago. But here's the thing: the reason why it went down this month was food and energy. Well, energy is going up right now. I think we went up 25 cents a gallon or something because OPEC just aligned with everybody and cut 1 million barrels a day from the pipeline. And they're doing it to screw the U.S. as far as I'm concerned. They're trying to make us weaker and weaker. So that little blip of energy prices going down, that's going to spike right back up the next time they do the report.
Well, here we go, coming into summer. I mean,
yeah. So who knows how that's going to go? But look, if you're thinking about buying a house, we're the ones that are telling you about these programs. We're the ones that use these programs every single day. We help our customers with the government programs that are out there to assist them. If your agent or people that you're thinking about hiring aren't talking to you about this stuff, you got to give us a call and give us a shot to show you what we could do to help you get into that home at the lowest amount possible. so that you can set your financial future. One of the things that we know is that when you own a home, people that there's been study after study for 30 years, you take two people, have the same kind of job, same kind of income, and through the years they get the same raises and everything else happens the same. One person stays a renter, one person becomes a homeowner. All things being equal, the person at the end of their life, the person that owned the home versus the renter is going to have 40% more wealth than the person that didn't. Okay.
What if you do that same study, Jimmy? One guy stays single, the single renter versus the married with kids homeowner.
I should have done that, Mike. I should have done that. Stayed the single guy, right? We're a lot wealthier right now. So the bottom line is that if you're looking to buy a home, you got to give us a call. First thing we're going to do is get you to Mike so you can know your numbers. Then you're going to bounce back to me so that I can go set up the search to find the house that you're looking for. We're not going to try to pressure you to buy something right now. What we're going to do is try to find the house that you're looking for in your budget. And when that house pops up, you're prepared and ready to go. The other thing, though, is this money is going to run out. So if you're thinking, wow, I want to take advantage of that 5%, and I'm so glad now that it's for all professionals down here, for all working Floridians. That money isn't going to be around forever. And we've seen that money come and go over the years. We've seen the programs where they start the program and it runs out of money. And then the next year it kicks in again when they have more money. You want to be in the cycle. If you're not in the market, in the game with us, you're really just sitting on the sidelines waiting.
That's it.
So please give us a call. We're one phone call away, 888-973-7828. I want to just end with this. I know we've only got like a minute and a half or something,
about
right?
3 minutes.
3
Yeah.
minutes. Okay, perfect time. Johnny sent me something last night when I was doing show prep and I didn't even see any of this. So right away I was like, oh, holy moly, I better look this up.
Yeah, because you were like, I'm not really finding anything. I was like, well, here's something that I know a lot of people read this week.
Yeah. So, and it was really good. So I was thinking, wow, that would be a really great thing. And then when I looked it up, I found out that it was more of a rumor than anything else.
And that's why I had the question mark on there. Like,
Yeah, yeah.
Is this
Exactly. So here's the thing. There's been a trend on the internet lately.
You've already used up a minute, Jim, of
Yeah.
your
It's
allotment.
like, thank you, Mike, is how to get a 40-year mortgage. Now they're talking about FHA coming out with the 40-year mortgage, everything. I was like, what? I never heard anything about this. So I started looking at it. And one of the main industry news organizations that I trust
Follow.
basically said that's a whole big rumor thing.
Hokum.
Yeah, it was all smoke and mirrors.
Kerfuffle?
Now there is. I just want to mention this because there's somebody. So there's no 40-year mortgages out there, guys.
I remember in 0506 there were.
Well, there is one type of 40-year mortgage.
There were
If you're going through a
modifications.
loan modification, and there's a guy named Rick has called me a bunch of times, and he's in trouble with this house. I didn't know these programs exist. So Rick, you might want to give me a call because this 40-year program for loan modifications, and that's when you can't afford the mortgage on your property, you might be able to get your loan extended to 40 years, which would drop your
The
monthly payment
make
Sure.
it more affordable?
to
so
make
you
it
can
more
stay in your home?
affordable. So that
Yeah.
program is out there for people struggling. We help you with that program too. So all you got to do is pick up the phone and give us a call. And I promise we'll get you the questions answered that you need to help your life.
That's it. Florida Talk Real Estate is the.com. Try to tell you all the time. You got to know it, use it, love it, share it. You could change lives by putting people on FloridaTalkRealEstate.com. Why? Because you're giving them access to pros. These are experts in their field. And if you listen on Saturdays, we try to have some fun. That's the attainment part. But we give you a lot of info. And they got info because they are in the trenches every day. They're going through it. And they're trying to just make it right by you. Whatever you're trying to do, buy a home, sell a home, stuck with a home you don't know what to do, fighting to keep your property insured, and everything in between. We got the pros to handle all that and more. FloridaTalkRealEstate.com. Ross Komarinetz, Brightway Insurance, Juno Beach. Have a great weekend, my
I'll
friend.
do my best. I hope everybody does the same.
Always nice to see you. Mike Rao, the mortgage guy from the mortgage firm. I hope you have a great weekend.
Hey, thank you, Johnny. Thanks, everybody.
And Jimmy D with the Florida Home Pros team, Keller Williams Innovations. That's Jim DePola, our fearless leader. Have a great weekend, my friend.
You too, guys. Have a great weekend.
FloridaTalkRealEstate.com. I'll say it again. FloridaTalkRealEstate.com. Jimothy, you got Greek and Joe joining you?
Sure do. Coming up right after this short break.
Going to squeeze out a sports show. Thank you very much for all your efforts, Jimothy, and thank you for being with us on a Saturday. Hopefully you'll be back with us next Saturday, streaming live on Facebook or YouTube, and of course, Florida Talk Real Estate every Saturday right here on Real Radio.